And we're here today with John Paul MacDuffie of the Wharton Management Department. John Paul, good to see you again.
Thanks, Steve. Good to be with you.
The IPO for the new General Motors raised about $20 billion for the company through the sale of those shares in the new GM. How will that help position GM to compete globally now against Ford and Chrysler and all of the other major automakers around the world, rather?
Well, GM has been already competing globally with considerable success, in some ways more successfully outside the U.S. than in the U.S. in recent years. I think what the IPO does above all else is it allows them to move away from the perception of being a troubled company that needed government bailout money to the next stage of the story they very much want to tell, which is that they're a reborn company that's on the move, that has a lot of exciting new products to offer consumers, that's doing very well globally, and that's on its way to being fully independent again. So I think that's the biggest gain. That's a gain in consumer perception. It's a gain in public perception. I think it's probably a boost for the morale and spirits of GM's own employees.
And why is it that the U.S. government still owns a pretty big chunk of GM? What is the rationale behind that?
It all goes back to the industry bailout, which is exactly what GM, I think, has felt created some stigma for them. But at the time, it was absolutely essential, or they would have likely ended up in Chapter 7 bankruptcy and liquidation. The government made a judgment call in the fall of 2008, spring of 2009, that this crisis was not just a crisis of one company, but it was actually an industry crisis, that General Motors and Chrysler, both of whom were in the worst shape, if they failed, that it would take down most of the supply base, which would make it impossible for Ford to produce cars or for many of the foreign automakers that are building cars in the U.S., that it's an industry with a lot of interdependency in the supply base. And so in order to avert an industry disaster with potential job losses of 1 to 3 million from various estimates, they decided to step in and rescue GM and Chrysler, forcing them to make a whole set of changes and putting them through a very rapid bankruptcy process so they could emerge as new companies.
Okay, and the bailout then, since it was good for the industry as a whole, just to reiterate your position on the bailout itself, was it a good thing for all concerned, for the unions, for corporations, for the corporations themselves, and for shareholders, do you think?
Well, nobody is happy about the bailout having happened or needing to happen, and there's a big concern, I think, politically about the government rescuing companies that may be too big to fail. That's part of the negative association to the bailout that certainly is a big concern to GM. My view is that this was perhaps once a century, once a three-quarter century event, that the Great Recession that we've been through was only exceeded by the Great Depression. That was the last time there was any kind of similar scope of government action involvement in the private sector. And so I wouldn't want this to be a regular occurrence, but I think it was warranted under these conditions. Ford, of course, did not take any funds from the government. That, I believe, has benefited Ford in a number of ways, although it's left them with more debt to manage. As GM and eventually Chrysler go back to being private companies, the government will be paid back. Will they get all their money back? That's still an open question. Shares sold last week at $33 a share. In order for the government to have its stake fully repaid, GM stock would have to be selling for about $53 a share. So that's still quite a gap. But both GM and the government felt that it was important to do a sale as soon as possible of at least some of the stock to signal that the government doesn't wish to stay in the business of owning a private company, and GM by no means wishes to stay a ward of the state.
Okay. Now, Ford's market cap as of today, November 22nd, is about $56 billion, and GM's market cap is about $51 billion. Does that sound about right to you for the market cap of those companies to be what they are, given the relative strengths of Ford and General Motors, do you think?
Well, that certainly marks a reversal because for most of the last century, except for the very early years of the auto industry, General Motors was the larger company with the larger market cap over Ford. And it reflects the fact that GM is now a much smaller company. It also reflects the fact that Ford has been receiving a very positive response in the stock market lately, and I think not only because of not having received bailout funds, but because in some ways its recovery and some of its current strengths have been evident for a while now. Those include several very strong new products, quality levels that are much higher and seem to be quite consistently high across the product line, some refocusing on automobiles, on cars as opposed to just trucks and SUVs, and on keeping the margins, the selling prices for those vehicles high enough to keep them in a financially sustainable position. So Ford's done a lot of the right things lately, and they've seen the benefit from that in their stock price and, more importantly, in the public consumer perception.
You've talked about this before, of course, but all of the U.S. companies for many years have had a reputational issue to deal with concerning the quality of their cars.
Yes.
From what I understand, in most respects, those negative views of those companies, if they haven't gone away in the minds of the public, they perhaps should have, because the cars are much better quality now, I think. But do you think GM still has a reputational problem going forward? Will it have to do anything special to convince consumers that not only are we back, but we have good, exciting, quality, reliable automobiles to sell to you?
Well, this issue is very much in the eyes of the consumer, and there are lag effects in terms of reputation. I'm sure it's very frustrating for GM, for Ford to see some perhaps lingering perceptions of quality problems from the past. They probably benefited in the early years of their quality slipping from some carryover reputation that preceded that. So it's just the nature of the way things are. I think the key has been, for Ford, improving quality quite consistently across the product line. GM, for a number of years, has had certain models that have been very successful with quality, have gotten awards and the like, but they've also had other vehicles that have still had a lot of quality problems. And so all it takes to keep that reputation alive is hearing from a friend or a neighbor or a colleague about a bad experience with a GM product, and then it reinforces whatever negative perceptions you have. So, and that consistency is tough. It's tough to keep it across all products. Obviously, a lot of these products have supplied parts that come from suppliers all over the world, so it's not that it's all completely under your control. These are very complex supply chains to manage. But that's the test that every automaker has to pass these days.
Do you think GM has exciting new vehicles in its pipeline that will get consumers excited in the years to come? And secondly, does the company currently have any vehicles, perhaps the Volt or the Cruise, that might get people excited about the company and to begin looking at GM cars again?
There's a number of GM models that I think are very promising in that regard, and they almost occupy different categories or different spaces. For Buick to start having some products that people are excited about, like the LaCrosse, is a bit of a change, because while they had some loyal consumers, they were mostly seen as being more conservative and having conservative tastes, and there wasn't much that was seen as really new in the Buick line, and that's starting to change. Buick, of course, in one of the interesting international ironies about brands, has been GM's top-selling brand in China for a long time. They have a crossover vehicle, which was a space that the U.S. companies were a bit slow to move into, so car platform-based SUVs. The Equinox, which has gotten rave reviews and is selling very well. And then you mentioned the Volt and the Cruise. The Cruise competes in a very tough segment against Toyota and Honda products and is getting very good reviews. And the Volt, of course, is this new electric vehicle, which has a bit of a unique design, and everybody's waiting to see it. The buzz on it is certainly great. The price is going to be high. The demand is uncertain. But it helps GM, as it would help any company, to be perceived as having some products that are at the technological edge.
The IPO created, of course, a lot of buzz about the company. But what exactly has changed? How is the new GM different from the old GM, aside from the government ownership part of it, but I mean internally, management and perhaps its management structure, management style. Has anything changed from the old company to the new that's significant?
Well, many things changed as a consequence of the bankruptcy. So GM shed a number of brands, including Pontiac and Hummer and Saturn. They closed a lot of plants. There's an old GM, which exists now as a separate company, which consists entirely of assets which are being slowly sold off in one way or another. So they, in one fell swoop, had some of the least productive or useful assets shifted off of their balance sheet. They've had a lot of management changes, of course. They have their second new CEO since the bankruptcy ended. Well, first there was an interim CEO, Fritz Henderson, who was a long-timer, and then Ed Whitaker, and now Dan Akerson. A number of new board members, and that was one of the primary ways that the new shareholders, the new owners, the government and the unions exerted some governance control was through appointing new members of the board. And so I think those are all the new things. That's an overlay on the fact that there were a lot of things in a lot of areas where GM had made improvements over time in their manufacturing, in their product design, in their management of suppliers. And many of those things, the goal has been to continue a positive trajectory. So it's kind of a mix of some of the good things that were happening already that were somewhat, thrown for a loop by the financial and industry crisis. The bankruptcy, which caused a lot of restructuring of the sort that we see often in a private equity-based workout. And then finally, a lot of management changes to set a new tone and take the company in a new direction.
And I guess that's what I'm asking really. Is there any way to know whether management is thinking differently now about how to approach the marketplace? I mean, it used to be that, and correct me if I'm wrong, that General Motors and the other big two automakers used to basically produce product and then hope they would, to kind of meet the needs of their production lines and hope that there would be enough customers for them. And clearly that didn't work out very well. So is upper management, is there any way to know whether they've seriously began to rethink how they look at the whole business and how it's changed globally vis-a-vis its competitors and what its customers want and that sort of thing? Do we know that yet?
We can only look for some telltale signs and keep an eye on a broad array of indicators. But one of those might in fact be kind of the production levels, the use of heavy discounting and incentives to sell products in order to keep the volume levels high. GM used to do that a lot. Arguably, they had a primarily fixed cost situation in many of their factories because of both inflexible manufacturing facilities, but also because of the labor costs and the legacy costs associated with that. That was argued to be a reason why they had to keep the factories full and then use incentives to sell. But when you're getting almost no margin on your products, sometimes even selling at a loss, that's no recipe for survival. So far we see more focus on a smaller number of vehicles that are more intensively marketed, and sort of holding the line on incentives, so aiming for higher selling prices. All of the brand building, all of the reputation building around quality and around new technologies are to help sustain that. The reduction in the number of dealerships, while quite controversial and still somewhat politically fraught, also means they don't have as many dealers competing with each other in a close proximity to be the one who gets the customer. So that helps in terms of the price cutting as well.
What is the relationship now? How would you characterize the relationship between the UAW and the company, and what should that relationship look like in the years to come?
It's a long and complicated history, of course. Another thing that I think is sometimes lost in the retelling of the recent history is that the union and General Motors and also the union with Ford and Chrysler had reached some landmark agreements in 2007 that would completely restructure how healthcare and pension costs were handled in the future. That is now largely implemented. It was unable to be funded in its original form because of the crisis, but the resolution through the bankruptcy has allowed that. So they had made progress towards finally solving what had been one of their most persistent and difficult problems. Coming out of the bankruptcy, I think, and having to work through so many things has left the companies and the unions and the union working quite well together. I think the big question on everybody's mind, if GM returns and is highly profitable, is will the union want to revisit some of the concessions that they've made, and what will the company's stance be to that? I think the company's position would be this was a necessary resetting of some of their labor costs and shouldn't be viewed as a temporary concession to be negotiated away. I think the union feels that they made an awful lot of sacrifices to help GM survive in this period, including becoming one of the owners as part of the agreement for how to fund these healthcare and pension funds.
And finally, as you well know, the pressure on every publicly traded company to perform quarter to quarter is immense.
Yes.
What will Wall Street's view of GM be now? Will GM feel that pressure quarter to quarter to show profit after profit after profit? Will institutional investors give the company a break because it's coming out of bankruptcy, and therefore will give it some time to land on its feet and get its sea legs and work through some issues, or not? How do you see that relationship going forward?
Well, we don't know, of course. I suspect that the goodwill and the openness to kind of giving GM a chance will be relatively short-lived. The feeling will be they have to continue to prove themselves. There's several things which I think make it likely that GM will be able to keep investors satisfied for a while. Some of it has to do with the return gradually of the U.S. auto market to closer to historic levels of sales. So in the crisis, that level had been around 15 million a year, 16 million, sometimes reaching as high as 17 plus. In the crisis, sales plunged to 9 million, so a 40% plunge in sales within a couple of months. This year, it looks like there'll be about 12 million. The historical trend on replacement volume, in other words, how many people replace their vehicles each year, is about 13 million. Of course, a car you can hold on to for a while if you need to, and that's what a lot of people have been doing. So, as sales return, 13 million seems likely to happen very soon, and then we may be back to 14, 15 million. There's a lot of upside for GM, for Ford, for Chrysler, for all of the companies in the U.S. market to be getting a part of those sales. GM also is selling very well in emerging economies where more of the growth is. So in the U.S. it's a recovery, but to what will be a relatively low level of growth in these emerging economies like China and Brazil and Russia and India, there's a lot of growth, and GM is quite well positioned in those markets. So between the recovery of U.S. sales and the global sales and the current strong products, I think things look good for them for a while. But of course, they will have to, particularly with the stream of successful new products, have to keep that going. And I think they'll also have to show good management of their global scope in finding ways to turn it to their advantage.
John Paul MacDuffie, professor of management here at the Wharton School, thank you very much.
Thank you, Steve. My pleasure.